Greetings, members, one and all of the Salivation Nation. Federal Reserve Governor speaks out against a CBDC. Let's explore. Yes, you heard that title right. You were reading it correctly. There is a Federal Reserve governor who actually is speaking out and is against a central bank digital currency to further modernize the U.S. payment system. This is actually Federal Reserve Governor Christopher J. Waller, and he did a speech and was made aware of this by Eddie's Little Stack. So I went and searched out the actual speech and found it. I'll actually post a link to this events page from AEI that has this speech and a Q&A session afterwards. It was really revealing. Essentially, really, when you think about it, it gives you a better understanding of the motives for the Federal Reserve to even explore this option, because the way that he laid the case out against the central bank digital currency, essentially, it's pretty much unnecessary, much less anything that's going to actually help people. But then again, that's not what the Federal Reserve seems to be all about, as we notice. And the thing is Mr. Waller does mention in his interview that a lot of people don't trust the Federal Reserve, and he caveats it by saying, even though they should. Well, Mr. Waller, I'm sorry, but that's probably the only point that I will disagree with you on. And I know the Federal Reserve system is private, but the actual chairman is appointed by the president. And nonetheless, it was quite an interesting speech. He talks about how there's a lot of different options out there in the private sector that serve the same purpose, if not a better way, to be able to provide a fast, easy digital payments. And when you think about it, in a sense, even through the banking system now, we have digital payments. How many people are using cash these days? Much less than before. However, there is still a growing number of people using cash. When I say growing, I'm talking about the youth. In other words, believe it or not, the generations coming along that are entering the economy are starting to use cash more and more these days. I heard from a recent radio report that I talked about in prior videos. But interesting indeed to think about how it looks like the most liquid of assets that are out there, the most untraceable and untrackable, are gold, silver, and cash. And cash is key for many people. In fact, he said in the speech that over 5% of people, based off of a 2019 study, are unbanked, meaning they don't operate within the banking system. They get paid cash, or they deal with cash. And they don't have a bank account. And so more likely those people will be left out if they move to a central bank digital currency system. And more than likely, in order to really fully be operational and to be fully utilized, everybody would have to move to that system. And the chances that of that 5% that would actually take part in it, about 1%, may be open to it. But nonetheless, the vast majority would not. In fact, I would say most in the utilizing the systems, even if it's just digital, and utilizing ACH transactions, being able to make digital payments, through either stable coins, or if you want to be anonymous, well, they are using Bitcoin and other cryptocurrencies as well. He talks about the potential misgivings or potential problems with stable coins and cryptocurrencies as well, which we are well aware of. When you think about it, in the end, it's about financial and transactional freedom. And he did mention about the tracking mechanisms that are in the central bank digital currency. Other nations are chasing them, like China and the like, but China is a very different system than we are here in the United States, even to this day, yea, though we're moving much closer to socialism, sadly, in this country. And so it was quite encouraging, and I think quite refreshing to see Governor Waller give his speech and speak out against this. But I think the most powerful argument that he made here is that it was unnecessary. And because it was unnecessary, that can only leave really one motive, or maybe two motives. Number one, to try to keep up with the rest of the world, which in a world of today, it seems like in many areas here, the United States is falling behind, which is really sad to think about, that we are following the world instead of leading the world. And this is an area where we could lead, and we could do it in a way that preserves free enterprise. But by the way, he was made a strong argument that bringing a CBDC onto the market would actually compete with the commercial banking system, which means that they would literally have to incentivize members or users of those banks by raising the interest rate for savings accounts and lowering their fees for large transactions and the like. And so that would essentially potentially compete them out of business, which means that the central bank of the United States, the Federal Reserve, would become the only bank, essentially a monopoly. Then what kind of power do we have? I mean, already they have a lot of power, probably the most powerful institution in the world when you think about it. And but nonetheless, when you think about this Federal Reserve note, once it's in your hand, it's untraceable, it's untrackable. It holds the weight of the body that backs it up. It's a legal tender for all debts, public and private. Who gives it that authority? Well, the Federal Reserve System, through the blessing of the government. And that's why they call it fiat. Gold and silver have something much more powerful that backs them up. Gold is the ultimate store of value, safe haven asset, but it is also money. And so this has a historical value that transcends space, time, and politics, and culture, and divisions. It is valued worldwide. It is stockpiled worldwide. It is treasured for its value and its beauty. So therefore, it's the ultimate form of money. Silver, one could even consider silver as a working man's money. It is not used in transactions today. I call it hibernating money, but it indeed is a store of value, and it's something that has proven itself time and time again on a transactional basis throughout history, most of history actually. It's only in recent years that we've seen it kind of move to the sidelines, and as of the recording of this video, it is down in terms of spot price. That does not take away its value as the ultimate transactional money. In other words, you didn't see gold transacted as often, as much as you saw silver, but gold provides the ultimate store of value in a very small package, and has been used in transactions, but just not as frequently and as long as silver, which makes sense considering its value in such a small package. The dollar bill has become the standard de facto, essentially top dog in the world's reserve currencies. To this day, it remains that, highly recognized around the world. It is, because of fiat, the ultimate transactional figure that we see today. And this governor here, Dr. Waller, I think discussing the logistics of the CBDC, how unnecessary it is, and how its inclusion into the system would just gum up the water, so to speak, gum up the system. And it's really unnecessary. And in fact, what is it about? And he even mentioned it there, and I was kind of shocked to hear it. But I think it's true. They want to be able to track all of your transactions. That's him saying it. And we have people fearing that, it's not going to instill confidence in the Federal Reserve or in the government or anything of that nature. And really what it's going to do, and he didn't mention this in his speech, but I'm going to throw my thoughts in there. I think if we move to a central bank digital currency and have Fed dollars, and that becomes a dominant role and promoted and pushed to such a level, you're going to see more and more people move to hard assets like gold and silver, much less cash. But I think you will see more and more people using cash transactions. I do go into some establishments, brick and mortar establishments, because I do use cash, and have been noticing I'm not getting change back. They're handing me back now whole dollars, and before they were giving me back less. If a transaction cost $7.25, I'd get $7 back. Today, I spent $7.25. I got $8 back. I saved 75 cents. This establishment lost 75 cents in that transaction. And they can only do that so long, especially at such low margins. But what does this mean? It means that people are holding on to their change, I think, for one, for various different reasons. Maybe part of it is because they don't really trust the system. Maybe it's in a sense to say because maybe people, in a sense, kind of see that something's coming big without really being able to articulate it. That's number one. Number two, the Federal Reserve are not distributing the change that the United States Mint is producing. The United States Mint is producing a lot of change out there, and they could be doing that to try to subvert cash payments, especially for stores that can't afford to give back 75 extra cents and change to whole dollars. There's a lot of those out there. Those are the small businesses out there. The place I was at a larger establishment. That was Walmart, by the way, just so you understand. They can afford to do it, but they can only afford to do it for so long. Small businesses can't afford to do that, and they're having a hard time getting these change. If you can hurt them, that means everything becomes centralized with big corporations, big money, and when you're forced to make these transactions by either losing the change or using your credit card when you don't use them for a candy bar or for something at the dollar store or what have you, then you're going to get more people using that and getting used to digital transactions. And it's only a step away from a central bank digital currency. You'll never know the difference. And so it's fascinating to see how they try to get us, or how they could potentially. Now, I don't know if that's the whole motivation, but that does seem highly suspicious that the U.S. Mint has been producing, as I talked about in a prior video about the coin shortage, and they're not distributing it to the banks. And I think this is something that gives a whole new angle to what Dr. Waller's comments were about here. So thank you again to Eddie's Little Stack for sharing this with me. It was a very interesting interview. Again, I will post it in the description or a pinned comment on this video. It's worth watching this to see the arguments he gives against a central bank digital currency. A brave governor indeed, especially in this day and age. Let me know what your thoughts are in the comment section below. Remember, paper. Well, this is it's a fabric material dollar, cotton fibers, gold, and silver. That's where it's at, folks. You stack this stuff, you'll be good to go. A multitude of gratitude to you all for taking the time to watch, and I want to encourage you to please rate, share, comment, and subscribe.